Hi guys, it's Stock Curry, and even though the markets went down on Monday, I think they're going to go up for the rest of this week. So in today's video, I'm going to give you the important news that's moving the markets, then I'm going to talk about some stocks and options to buy on Tuesday. So let's get into it! Okay, let's get into the market news, and the US and China spoke over the weekend, and based upon rumors that Russia asked China for equipment for the war in Ukraine, the United States warned China that if they provide equipment to Russia, the US will impose sanctions on China. If that happens, that could be really bad for all US stocks that do business in China. That includes Chinese companies such as NIO, and it also includes US companies such as Tesla and Apple. That news caused the markets to drop on Monday. Now, the NASDAQ fell further than the other indices today, and the reason is because the 10-year Treasury yield spiked well above 2% on Monday. The 10-year Treasury yield affects the NASDAQ more than the other indices. As the 10-year Treasury yield continues to go up, that will continue to put downward pressure on the NASDAQ. Surprisingly, oil dropped over 3% to near $100 a barrel. That should have been an upward catalyst for the markets, but unfortunately, the China news overshadowed the drop in oil prices. The drop in oil was actually bad for some stocks, including oil stocks and charging station stocks. Charging station stocks ran up last week when oil spiked on thoughts that governments would increase spending to build out their EV infrastructure quickly in the wake of sanctions on Russian oil. But when oil prices started going back down on Friday, charging station stocks started falling. So this morning at the open, I closed the CHPT bull put spread we opened last week for an 11% profit. And it's a good thing I did, because CHPT fell almost 10% on Monday. It rejected the 100-day EMA resistance level, and it is turning bearish again. So I'm pretty happy with this 11% profit we made. By the way, if you want to make money as the market goes down like I am, I post all of my trades on Twitter free of charge, so you can copy them if you want. You can follow me on Twitter at twitter.com/realscottcurry. And if you want to know what I'm buying and selling before the trades are placed, as well as my reasons for placing the trades, you can join the VIP Discord. Not only will you get my trade alerts before the trades are filled, you will also get access to me and other experienced traders where we will analyze your trades, answer your questions, and help you become a profitable trader. If that's something you want, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. Now, I should note that markets are setting up for a bull run for the rest of this week. And one of the reasons is because commodity prices are dropping. As you can see here with this wheat ETF, prices are dropping from their highs, and the MACD is about to form a death cross. So it looks like commodities will continue to drop this week, and that will be good for the stock market. Just keep in mind that the Fed's March meeting starts on Tuesday and ends on Wednesday. On Wednesday morning, we should find out how much the Fed will raise interest rates. Then, around 1 p.m. Eastern Time on Wednesday, Jerome Powell will speak, and we'll get our first look at how the Fed plans to raise interest rates for the rest of this year. A 25 basis point rate hike is priced in for March. If the Fed raises interest rates by more than 25 basis points, or if they start selling their assets, that could cause the markets to drop after the Fed meeting. And depending upon what Jerome Powell says, that will cause the markets to move, but which direction is still unknown. Now, if you look at the QQQ chart, which is a NASDAQ ETF, even though the technicals are 100% bearish, QQQ is at a strong level of resistance here. So there's a good chance the markets will rebound and go up for the rest of this week. I would expect QQQ to rise up to somewhere between $330 and $340 before continuing its downtrend. SPY is also at a support level here, so I expect SPY to rebound and go up to somewhere between $425 and $430 this week before continuing lower. So there's some opportunity to make some short-term trades here this week. Just keep in mind that if the Fed is more hawkish than we expect, that could cause the markets to break below support and crash. But beyond this week, we have to consider that at some point, the market is going to recover a lot of the losses. It won't recover all of the losses, but it will most likely recover a lot of the losses. And that's just because of how bear markets work. Bear markets typically fall in a zigzag pattern, as you can see here with what happened between 2007 and 2009 in the Nasdaq. Stocks will fall a lot at first, and then recover a lot of the loss, and then fall a lot more, and then recover most of that loss, and then fall again, and then recover. And then at some point, the bear market ends with a massive sell-off. As I explained in yesterday's video, I think the massive sell-off will occur when the recession starts next year. Until then, I think we'll get these periods of major drops and major gains, yet never quite getting back to all-time highs. And there may even be a 3-month period where stocks rise consistently, as we saw from March to May in 2008. That kind of period is very dangerous because a lot of people will think the bear market is over, and yet we're still in for more pain. We won't know for sure that a bear market is over until stocks get back to all-time highs. And I don't think that will happen until sometime in 2024 or 2025. But if you wait for stocks to get back to all-time highs to buy in, you will have missed out on a massive bull run. So if you don't want to try and time the market, the best you can do is just dollar cost average in and hold. No matter how painful it gets, no matter how much your stocks go down, you just hold. On the other hand, if you want to try and time the market, as Meet Kevin, Chicken Genius Singapore, and myself are doing, then you can sell your stocks and hold cash, and buy in when you think the bottom is here. For me personally, I think the bottom will occur sometime around August of 2023, so that's when I plan to buy back in. For now, I'm mostly holding cash, while also doing some short-term trading to take advantage of the volatility. Now let's talk about some stocks and options to buy on Tuesday, but first, let me give you a quick update on AMC. AMC just fell below a very strong support level of $14.50. That support level goes all the way back to March of last year. Now that AMC is below this strong support level, there's a good chance that AMC will continue to fall. The next support level is around $12.20, and the next support level after that is around $9. Below that, AMC has very strong support at $5.50. And if AMC drops down to $4.90, it will officially be a value stock based upon a price to sales ratio of 1. Now onto my first option pick, and it's TSLA. This is Tesla, and they're an American EV manufacturer. A lot of people have been asking about TSLA and where the valuation might go. Taking a look at the technicals, we can see how TSLA dropped below the 300-day EMA, as well as the strong support level of $780. In addition, the MACD just formed a death cross. All of that is 100% bearish. The next support level is at $620, with very strong support at $540. So at this point, TSLA is confirmed bearishness, and it does look like it will drop down to $620 before bouncing, and then eventually down to $540. So let's say you wanted to buy a put option on TSLA to make money as it drops, and you wanted to open a June expiration date to give it time to drop. Well, as you can see, the options are very expensive. We're talking over $100 per contract at the money. And you have to multiply that by 100 shares, so a single put option would cost you over $10,000. Since you probably don't have $10,000 to drop on a single option, let me show you a way to open a bearish position on TSLA for significantly less money. The first thing you want to do is change your strategy from single to vertical. Now, as you can see, these options are significantly cheaper. Now, ideally, you want to find an option with open interest greater than 1,000. And I can see that we have some put option spreads between $670 and $710 with open interest greater than 1,000. Keep in mind that I expect TSLA to drop down to at least $620, but to be safe, we want to select a price higher than that to give us the greatest chance of getting max profit on this play. So let's say we select the $690/$700 put spread. Since we expect the price to go down, we want to buy this. Now let's click graph so we can see our profit and loss. Now the mid price is $4, but to ensure this fills, we'll have to increase the price a little, so let's bring this up to $4.25. Now as you can see on this graph, so long as TSLA closes below $690 on June 17th, you will make max profit of $575 on this play. And if TSLA closes above $700 on June 17th, you will lose $425. So you are risking $425 to make $575. That will be a 135% profit if TSLA closes below $690. And given how the technicals are pointing to TSLA dropping down to $620 or even $540, the $690 price level gives you a lot of safety room in case TSLA doesn't drop as much as the technicals are pointing to. So as you can see, spending $425 for a potential 135% profit is a lot better than spending over $10,000 on a single put option. By the way, this strategy is called a debit bear put spread, and it's a vertical option strategy. Also, you will need level 3 options in Webull to make this trade. Now there is one stock that some people in my Discord were talking about that I think would make a great stock to buy for a long-term hold, and that is ZIM, ZIM Integrated Shipping Services. ZIM is an Israeli cargo shipping company with its main headquarters in Haifa and secondary headquarters in the United States and Virginia. ZIM has a very low forward PE ratio of 2.7, and its revenue and earnings growth have been massive, with an average 1,445% year-over-year earnings growth over the past 3 quarters. Now, part of the reason the stock is not trading at a higher valuation is because people think the earnings growth will go down due to the fact that it got a one-time boost due to the pandemic and the supply chain issues that are going on right now. But if you think the supply chain issues will remain for some time, then this will be a good stock to own. As you can see on the weekly chart, this stock has been an absolute beast over the past year, and that's because they consistently beat earnings expectations and provide good forward guidance. 71% of big money traders are bullish on ZIM, with only 28% bearish. Now, going back to the daily chart, if we look at the technicals, you can see how the candles are way above the 10-day EMA. The RSI is also overbought, so there's a good chance we'll get a slight pullback here soon. I would look to open a position on ZIM closer to the 50-day EMA at around $67. The 50-day EMA tends to be strong support for ZIM. So I'll give you a buy under price of $70, an ideal buy-in price of $62, and a stop loss price of $55. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what you're going to buy this week. And again, if you want to join our Discord so that you can find out about these plays before I start talking about them on YouTube, you can sign up for the Discord at stockcurry.vip/getvip. Also, I wanted to let you know that Webull is offering their best promotion ever this month. When you sign up using my link in the description below and deposit just $1, Webull's going to send you 5 free stocks worth up to $9,600. You also get $5 in free crypto when you open your first crypto trade. Again, if you want 5 free stocks worth up to $9,600, you can open an account with Webull using my link in the description below. Just deposit $1 by the end of this month. And if you're on Robinhood and you want to move your account from Robinhood over to Webull, Webull will reimburse the $75 transfer fee that Robinhood's going to charge you. So there's no risk in transferring from Robinhood to Webull. Now, if you're not in the United States, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform. Trades start at just $1 US, 1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.